Bitcoin might be repeating a pattern that previously led to some of its biggest crashes. According to a recent market analysis, a long-term technical signal has appeared again on Bitcoin's chart, the same one that showed up before major drops in past cycles. This signal comes from the 50 and 200 period moving averages crossing on a 3-day chart, something traders often see as a bearish sign. The last time this happened? It preceded deeper bear markets in 2014, 2018, and 2022. For example, in 2018, Bitcoin fell from around $6,000 to below $4,500 shortly after the signal appeared. Another example stems from 2022, when Bitcoin dropped from roughly $32,000 to about $17,500 during the next leg down. Now the same pattern is flashing again. Bitcoin has recently been trading around the mid-$60,000 range, and some traders are preparing for the possibility of a move below $60,000 if history repeats itself. But it's not all doom and gloom. Institutional demand is still strong. U.S. spot Bitcoin ETFs reportedly pulled in over $1 billion in just 3 days. And large wallets holding more than 10,000 BTC have been accumulating during the dip. That suggests long-term investors may be buying while the market is nervous. So the big question is this: is this just another scare or the start of a deeper correction? History says be cautious, but strong demand could change the outcome this time. Bitcoin investors might finally be catching a break, but don't celebrate just yet. According to new analysis, the worst of the price crash could be behind us. Yet the market may still face months of something analysts call time pain. After hitting record highs around $125,000 in 2025, Bitcoin has gone through a brutal correction, losing roughly half its value in just a few months. But now, some analysts believe the market may be nearing a bottom. On-chain analyst James Check says many indicators suggest Bitcoin's price pain is largely over. In other words, the worst of the dramatic drops may already have happened. But that doesn't mean a quick recovery. Instead, the market could enter a long period of sideways movement, what he calls time pain. Time pain is when prices stop crashing, but also stop going up. Markets grind sideways for months, frustrating traders and slowly wearing down investor confidence. Historically, Bitcoin has gone through similar phases after major sell-offs. Paradoxically, this phase can actually be healthy for the market. It allows speculation to cool off, weak hands to exit, and long-term investors to accumulate. Some analysts even argue that the current conditions resemble a de-risked setup for Bitcoin going forward. Still, not everyone is convinced the downturn is finished. Some researchers warn that if a full crypto winter unfolds, prices could fall much further before recovering. So while the worst price pain might be behind Bitcoin, the real test could be patience. Because in crypto, sometimes the hardest part of a bear market is simply waiting. That's it for me for this week's Block Bites. Catch you in the next one.
Thanks to Tommy for this week's breakdown. So here's the big question. Is Bitcoin quietly building a base for the next breakout? Or are we underestimating how brutal this cycle could still become? Drop your prediction in the comments. Bottom already in or more downside ahead? And if you want clear, no hype crypto breakdowns, hit subscribe because this story is far from over.